I'm about to share something that might surprise you. It's a perspective that challenges the common thinking around investing, and it could actually make you feel better about your current financial situation. If you're a small investor with just a few $1,000s, or even just a few hundred, you're in a much stronger position than you think. You have significant advantages that I don't even have anymore. Opportunities that are within your reach and flexibility that's incredibly valuable. Many people think the opposite. They imagine that if they only had the kind of wealth Warren Buffett has, they could get rich. But that's actually backwards. When you have billions like I do, your choices are much more limited. You can only invest in the largest companies, and you can't move quickly to take advantage of smaller opportunities. But as a small investor, you have something that I can no longer access: the ability to be nimble. If you know how to leverage this flexibility, if you understand the secret to small investor success, you can build real wealth, even if you're starting with just a tiny sum. Today, I want to reveal that secret to you, the strategy that works best for small investors, the approach that lets you succeed, even when you don't have large amounts of capital. This isn't theory. This is based on my 75 years of experience in investing. This is exactly what I would do if I were starting out today with just $10, or even just $1,000. Let's begin with the big secret. The secret most small investors never discover. And here it is: your big advantage as a small investor is that you can put your money into low-cost index funds and simply leave them alone. That's it. I know, it doesn't sound that exciting. You were probably expecting a stock-picking strategy, a way to identify the next Amazon, or a clever trick to beat the market. But that's not the secret. The real secret is simplicity. You don't need to be clever. You don't need to pick individual stocks. You don't need to time the market. All you need to do is buy low-cost index funds, hold them forever, and let compound interest work its magic. Now, let me explain why this is such a powerful advantage and why it works so well for small investors. First, let's break down what an index fund is. It's a fund that holds all the stocks in a particular index. For example, an S&P 500 index fund owns all 500 companies in the S&P 500. A total stock market index fund owns essentially every publicly traded company in America. When you buy an index fund, you're essentially buying a small piece of the entire American economy. You're betting on capitalism, on innovation, on human progress, and the fact that businesses as a whole tend to create value over time. And historically, that bet has paid off remarkably well. The S&P 500 has returned about 10% annually over the long term, sometimes more, sometimes less, but over the course of decades, the average is about 10%. This means your money doubles roughly every 7 years. In 20 years, your money will have quadrupled. In 30 years, it will have grown 17-fold, from almost nothing to something substantial, from something small to something life-changing. But here's why this strategy works especially well for small investors like you. You have 3 massive advantages that large investors, like me, simply don't have. Advantage number 1, you can invest everything in the stock market without worrying about liquidity. When you have billions of dollars, you can't just throw all of it into stocks and forget about it. You need liquidity, the ability to quickly deploy capital when opportunities arise. But when you have $10,000 or even $100,000, you don't have to worry about that. You can invest it all specifically in index funds and never worry about needing to liquidate. You don't have to hold billions in cash waiting for opportunities to appear. You can be fully invested and earn returns on every single dollar. That's a huge advantage. At Berkshire, I need to keep tens of billions of dollars in cash. That cash isn't earning much. It's a drag on returns, but I need it for when opportunities come up. You don't have that problem. You can be 100% invested, with every dollar working for you. Advantage number 2, you can achieve perfect diversification at almost no cost. A single S&P 500 index fund gives you ownership in 500 companies. A total stock market index fund gives you thousands of companies. Instantly, you're diversified across every sector of the economy, and it costs almost nothing. Vanguard's S&P 500 fund charges just 0.3% annually. That's $3 per year on a $10,000 investment. When I invest, I have to do massive research on individual companies. I have to analyze financial statements, meet with company management, and understand competitive advantages. It takes a lot of time and expertise. Even then, my investments tend to be concentrated in just a few positions because I can't diversify like you can. But you can own the entire market for $3 a year. That's a huge advantage that simply didn't exist when I was starting out. Advantage number 3, you don't ever have to sell. You don't have to realize capital gains or pay taxes until you retire and start withdrawing money. This is a huge benefit. Let me explain why. Every time you sell an investment at a profit, you owe taxes on that gain. Let's say you bought a stock for $10,000 and sold it for $28, or you made a $10,000 profit, but you'll pay taxes on it, say $3,000. So you're left with $17,000 to reinvest. But if you never sell, you never have to pay those taxes. Your full $20,000 keeps compounding year after year with no tax drag. The difference between paying taxes along the way versus deferring them until the end is massive. Charlie Munger used to say that Berkshire was structured like a tax-exempt investor. Even though we pay corporate taxes, why? Because we never sell. We buy great businesses and hold them forever, so we never have to realize gains and pay capital gains taxes. Our profits just keep compounding. You can do the same thing with index funds. Buy them, hold them, never sell except when you need the money in retirement. Let your investments compound without the tax drag. That's advantage number 3. So those are your 3 massive advantages as a small investor: full investment without liquidity concerns, perfect diversification at minimal cost, and tax-deferred compounding until withdrawal. Now, let me show you what this could mean in practice. Let's say you're 30 years old and you have $10,000 to invest. You put it all in an S&P 500 index fund, and then you add $500 a month or $6,000 a year for the next 35 years. At a 10% annual return, by the time you're 65, you'll have about $2.3 million. From your $10,000 initial investment and the $6,000 you added each year, you'll turn $220,000 of your own money into $2.3 million. That's the power of index fund investing for small investors. No stock picking, no market timing, no clever tricks, just consistent investing in a low-cost index fund over the course of decades. Now, some people ask, Warren, you made your fortune picking stocks. Why do you recommend index funds for everyone else? It's a fair question, and here's the answer. I've dedicated my entire life to studying businesses and investing. I work 12-hour days analyzing companies. I have decades of experience and a team of brilliant people helping me. And despite all of that, I still make mistakes. Most people don't have that kind of time or expertise. They have jobs, families, lives outside of investing. So, for most people, trying to pick stocks is like competing with professionals when you don't have the tools or time to do it properly. It's a losing game. But index funds level the playing field. You don't need expertise. You don't need time. You don't need to analyze anything. You just buy the entire market and let it grow, and you'll beat most professional investors who are trying to be clever. In fact, I made a bet in 2007. I wagered $1 million that an S&P 500 index fund would beat a collection of hedge funds over the next 10 years. These hedge funds had brilliant managers, sophisticated strategies, high fees, and all the best resources money could buy. But the simple index fund crushed them. It wasn't even close. The index fund gained about 25%. The hedge funds averaged less than 40%. The simple, dumb strategy beat the complex, smart strategies by a wide margin. That's the power of what I'm telling you. You don't need to be brilliant. You don't need to be sophisticated. You just need to be simple and consistent. Buy index funds. Hold them forever. That's the secret. Now, let me walk you through the exact strategy I'd follow if I were a small investor starting today. Here's what I'd do with $10,000, $100,000, or even just $1,000.